Good afternoon and welcome to our webinar on maximizing loan forgiveness. This is about understanding the Flexibility Act and what it means for your PPP loan. We have a lot of information to share with you. As you're aware, the PPP Flex Act was passed by the House on May 28th and passed by Senate on June 3rd and then was signed into law by the President on June 5th. So this act really modifies some of the original information and the provisions of the original PPP or Paycheck Protection Program that came out with the CARES Act several weeks ago. So today's goal is really to outline the major changes, clarify some of those different areas for you, and discuss the implications that it really may have for you as a small business owner and a borrower, so that you have a better understanding of the forgiveness options that are out there for you. Overall, the big news is that this new act gives you a lot more flexibility, and so we're going to try to take you through that today and help you understand it. So with that in mind, I have a couple of our resident experts with us. I have Nelson Befitel, who is our Chief Counsel. Welcome, Nelson, and Elena Martinez, who is our Compliance and Regulatory Manager. Welcome, Elena. Thank you. So they are going to take us through all of this guidance, and we are going to share with you again what some of those implications really look like for you, and then what next steps and what you can start preparing for in kind of the near term. So with that in mind, we're going to go ahead and keep moving, and we are going to, so that you guys can focus on the slides, we're going to go off camera at this point. Okay. Let me get disabled here. All right. So our objective really for today, again, is to give you some expert guidance. I've got Nelson and Elena with us. They're going to talk about these loan forgiveness rules that have been enacted under this PPP Flexibility Act, and really give you some good recommendations on the most practical strategies for your business as it relates to the loan forgiveness rules. And what this is going to look like in terms of how we're going to walk through this is really to help you understand why you can more easily achieve loan forgiveness with the new changes in these new provisions. Nelson's actually going to take you through a pretty deep dive into those key provisions, with Elena sharing with us some commentary on how that's really going to be beneficial to you in your business and where you might find value in it. And then we'll wrap up with kind of the next steps. You know, this is our roadmap for today. I do want to set the expectation during this session, we are not going to be going over the forgiveness calculation formula because the SBA hasn't given us an updated one yet, and that, you know, that really takes into account these new rules. So knowing that there's still going to be changes, what we wanted to do is try to share this updated guidance with you, not spend time on the application yet. Of course, as soon as we have that, we'll make sure that we share it with you. But today's focus is really taking you through understanding these new provisions and how this is going to impact and make it easier for you to get loan forgiveness. Now, with that, I'm going to hand it over to Nelson.
Thank you, Janina. Yes, we have really exciting news to share with you. Basically, Congress has listened to small businesses and made some really good changes that really was going to help you achieve forgiveness a lot easier. As you know, we've been advocating for quite some time that when using this your PPP funds, you should not only use it focusing on the short term for survival, but also for the long haul. Spend what you need during an 8-week period, covered period, and use the remainder of your loan to rebuild your business after the pandemic. These funds that you did not use during the covered period would eventually turn into a 1% loan. Well, the good news is that now you can turn those funds that were intended to be a loan into a forgivable loan or a government grant, meaning you don't have to pay them back because the government has just extended the 8-week covered period to 24 weeks, which is huge. There are also some other changes that will make it easier for you to achieve full forgiveness. And some of these changes that we're going to cover today, we're going to cover the 24-week covered period expansion. You also will have more flexibility on how you spend your funds. And now you can spend up to 40% of your funds on non-payroll costs, And previously, under the SBA rules, when they released the application, they've also expanded what those non-payroll funds should include, and we'll discuss that in more detail. Another big change is that you have until the end of the year, 12/31, to restore your FTE, your full-time employee equivalent count, and you also have the opportunity to restore your pay if you reduced your employees' wages more than 25%. There's another safe harbors, as lawyers would like to call it, but it's basically these are exemptions. What it means is that if your business changed and you're unable to meet the full-time employee count because you had to implement health and safety restrictions in this new COVID era, then you will not be penalized for that or be assessed against you when you apply for loan forgiveness. And Congress have also eliminated some of the technicalities that really made it difficult for you to achieve some of those, to achieve for full forgiveness.
Yeah, it's really getting hard to not be able to achieve for forgiveness. So we've got this long runway to use the funds. If you were concerned about being able to use all your funds, you now have so much more time to do it. It really helps businesses that are ramping back up slowly over time. The technicality of this new safe harbor, if your business hasn't returned to normal. So we're still awaiting some guidance, and I know you've all heard that a lot in the news. But what happens if I use my funds the way I'm supposed to before the 20 weeks have elapsed? That's the question you have. But you have all this flexibility, so there's no reason that your loan won't be forgiven, which is fantastic.
So we're going to go and just discuss with you the key provisions that would make it easier for you to achieve full forgiveness. We'll talk about the 24 weeks expansion, the expansion of payroll, non-payroll costs, the safe harbor of restoring your employees up until December 31st. And we'll talk about another safe harbor when your business is impacted because of health and safety reasons. And another one here is that, another good news here is that you'll have the opportunity, at least the bank will be able to allow you up to 5 years to repay your loan. So good changes that came our way. So let's just get started on explaining some of the new rules. So the first one, this is the headline rule. You have 24 weeks to spend your PPP funds. So meaning that instead of the 8-week covered period, you now have 24 weeks. I mean, that's big, that's tremendous. That's a big change because businesses found it very difficult to spend their PPP funds within those 8 weeks, especially with the government stay-home orders and business really unable to operate their business at all. So this expansion was addressing those concerns. So you have option one. If you have not spent all your PPP funds or did not meet all those ratios, ratio of 60-40 ratio, the new spending ratio, then that's a pretty easy decision. You want to opt into the new covered period of 24 weeks. But you also can keep the 8-week covered period if you spent your funds accordingly and have spent at least 60% on payroll. Then you might want to submit your forgiveness application once, of course, the bank starts accepting it and once the SBA have updated their application process.
This is great. This is really the root of flexibility, right? I can use it in my 8 weeks if I've been on track to spend my PPP funds in my 8 weeks, or if I've more recently got my loan and I'm on track to spending in my 8 weeks. Like, I can plan for that. But if I am not going to spend all the funds and my business isn't open yet, I can take advantage of that 24 weeks and spend the funds over a longer period of time. Either one I choose, I get to do a 60-40 split or 60-40 ratio between payroll costs and non-payroll costs. So that's a nice increase for businesses. And where I think this is going to really help is if you've been working towards that 75%, but you weren't going to quite get there in the 8 weeks. Now, because of that 60-40 ratio, everyone has an additional utility bill or some sort of additional part of rent that they can pay. So this allows you to bring more of that in. If your payroll wasn't quite at the 75-25 ratio that it was before, that you can more easily meet the 60-40 ratio in the 8 weeks. So that might help some more borrowers actually fulfill their loan fund usage in the 8 weeks. They can apply for forgiveness when they can and move on with their business planning. And for businesses that were going to need that longer runway of 24 weeks, they're able to do so. So for example, if you got your loan on April 10th, if you were really early to the game, your 56 days would have been up on June 5th, but now you have 112 more days, so roughly September 25th to use those funds in. And also, if you don't use all the funds, that's okay. They become a 1% loan between up to that 5 years now. So this really gives so much more flexibility to businesses to plan on what are their needs, not just how do I spend money, how do I help my business reopen and ramp up.
Okay, so you talked about the 60-40% ratio. So let's just talk more about the 40%. So basically, Congress says that you can now use up to 40% of your PPP funds on non-payroll costs. So again, that's a big change, a meaningful change, because a lot, especially in Hawaii, a lot of our operational costs are embedded in our rent and mortgage, mainly rent. And also, so let's just kind of take a look at this. So the other expansion that they've made, that the SBA made, is to expand what constitutes non-payroll costs. So payroll costs, as you know, includes interest from mortgage, but also lease on personal property, what we call personal property. But basically what that means is business equipment, such as copiers, servers, fleet vehicles, company vehicles. So in other words, if you're leasing those items, you can include them into your allocated costs for your PPP funding. And then just an overview, utilities include gas, water, transportation, the internet, electrical bills, and your telephone bills. So again, you can use up to 40% in non-payroll costs. So this might be a good opportunity for you to see what you've spent in the last 8 weeks or so during a covered period and what you intend to spend, and see if you could expand your non-payroll costs and take advantage of this new rule.
Yes, it's huge for businesses, especially if you've been closed for a while. Some businesses are entering almost about 3 months that they've been closed, and rent has been rarely abated or sometimes just deferred during that time. So you can use your PPP to make sure that those costs get covered, and then work on meeting that 60% of your loan amount with payroll as you open back up and bring staff back. So this offers a lot more flexibility. And some businesses I know felt pigeonholed, like they had to pay people who weren't working, and that was the absolute intent of the PPP loan, to keep employees off of unemployment, to keep them working. In some cases, it wasn't possible to keep folks working. So this really adds, it's 15% more flexibility for covering those business expenses while businesses were closed or operating at very minimal capacity. And I know it's going to make a big difference for a lot of our client partners out there.
Previously, I think one of the biggest obstacles to obtaining forgiveness, full forgiveness, or maximum forgiveness was the restoration of your full-time employees and FTEs, or full-time equivalent. And a lot had to do with the fact that you were closed during all this time. And even though the date, the previous date was June 30th, that still did not allow us much time to restore employees. I mean, that's only a few weeks away from today. So what Congress did was actually extended the date that you have to restore your full-time employees to the end of December 31st. So what that means is that you have your 24 weeks to use your funding, and then you have up until December 31st to restore your FTEs. So remember we talked about there's a reference period that's around the pre-COVID date, and then on December 31st, you want to have your FTEs equal the amount that you had during your reference period. This safe harbor, or this exemption, also applies to you restoring your employees' pay that were reduced by 25%. And this is probably more applicable or relevant to the restaurant industries and those industries that pay their employees by commission, because just by default, without you operating at an optimal level, their pay were probably reduced by more than 25%, but hopefully your business will pick up and they'll be more likely to be closer to their original pay, pre-COVID pay, and you'll be allowed to be used as exemption. There's also some of the exemptions that. Yeah, go ahead, Elena.
Okay, yeah, I was gonna say this offers, honing in on that flexibility. It gives the option, if employees not able to return to work and you're not able to hire them, if you've had to let someone go for cause. During this time, we've seen some voluntary quits, some folks who haven't been able, felt comfortable either coming back to the workplace or with childcare or family obligations. With, just it's a new world for us, right? They've had to reduce hours. So this really gives a lot of flexibility in that restoration, and the wages. It's very cut and dry if you are, straight salary or hourly for your staff. If you've reduced their wages or not, it's going to be a little more complex for our friends in the industries with tips and commissions, because those are factored in. But the great thing is business has time to recover and become a new normal. And we're thinking most businesses, if they're able to open up as full as they're able to do in this new world, should be able to probably hit that December 31st date without too much effort, hopefully.
Yeah, fingers crossed that we'll have our economy up and running by then, and hopefully most of businesses who took out a PPP loan will be able to meet the 12/31 deadline to restore their employees. If we can go back, I just wanted to highlight some of the other exemptions that we talked about previously when you're counting your FTEs. So keep in mind that this will not count against you when you're calculating your FTEs. So if an employee rejects a good faith written offer to return to work, so if you ask someone to come to work, you have a written offer, it's a reasonable offer, and the employee says no, you want to document that, and that won't count against you when you're counting your FTEs. An employee is terminated for cause, that won't count against you. And if an employee voluntarily quits or asks for reduced hours, that won't count against you. So what that basically means is that they'll count these employees who fall in these buckets as an FTE on December 31st. So here's another nice change by Congress. So a lot of us are struggling to get our businesses back up and running. And what's making even harder is some of the restrictions that's needed in order for us to comply with government regulations now on social distancing and occupancy limits. And if if we can show that that had an impact on your business activity, then that will not again be assessed against you when you apply for forgiveness. There's a lot here that needs to be ironed out and for the guidelines by the SBA. But here are some of the examples that would not be used against you if you can show that it created some business impact. Restaurants, there's going to be limits on seatings. Retail, limits on customers in the store. Schools, if there's a limit of how many students can be in a classroom, and that affects your enrollment, which affects your revenue, you can also use that as an exemption. And also group activities, especially in the tour industry, where there's going to be limits on how many can be in a group or who can be in a group. If you can show that impact your level of business activity, you will be able to use that safe harbor or exemption in calculating your forgiveness loan. Again, a lot still needs to be ironed out here, and we wait for further guidelines from the SBA.
Yeah, this was the biggest breath of fresh air when reading the PPP Flex Act. And the Flex Act, it's only a couple pages, large font, good spacing. So it really was meant to be simple. I mean, with that simplicity does come some room for interpretation, and that we do need guidance for. But the end goal, that if your business cannot be at that similar, same level of business activity, that's the quote from the act itself, that you have flexibility, that you aren't going to be penalized for that, because that is a concern that we have seen from so many businesses, that some of us just aren't going to be able to restore business to what it was before the pre-COVID period, whether that's capacity limits or limits on groups. I'm really thinking schools and activity groups. A tour van, you're going on a great island tour. Can you only put in, you can only put people probably from the same household in the van, or a limit on how many folks go in the van, or a tour bus, or any group activity, even a walking tour, because you don't want to commingle too many households. So there's so much change happening for business, and reading this, it was a huge sigh of relief that the businesses can focus on running their business and trying to grow their business back up and adapt to all these new rules and limitations, that this is just one less thing that they have to worry about. We are waiting for some guidance, absolutely, but knowing that this is on the table and that it is going to be very, very material to most businesses out there. This is probably the most exciting thing in the whole Flex Act and the entirety of the PPP that I've seen. So I'm definitely enthusiastic about it.
All right. So I'm hoping with these changes, most of you will be able to take advantage of it and be able to reduce your loan amount significantly. But I'm sure there's some situations that would cause someone to have a loan, carry a loan after the covered period, or maybe you might want to choose to carry a loan with a 1% interest. But if that's the case, more good news here. Your bank can now extend your loan repayment up to 5 years. So if you receive your loan before June 5th, you will have to ask your bank if you want this extension to extend it to 5 years. But they're authorized to do so, and they're empowered to do so, and so it's not. So why not ask your bank if you need this extra time to pay your loan? If you are looking to apply for a loan, there are still funds available, or you receive your loan after 6/5, you now have, Congress have granted you an automatic 5-year period to repay your loan. So good news on the repayment side. Hopefully, like we've said, hopefully you'll be able to reduce your loan amount, but if you have one, then you can take advantage of the extended repayment period.
Yeah, this is great because it allows, if you are carrying a loan, it's going to be much harder to carry a loan now with all the other flexibility for forgiveness. But in the event that you do, whether it's a large or a small loan, you have the ability to ask your bank to, if you got your loan, you're part of the earlier group, and got your loan in April or May, you can ask your bank if they can extend it to up to 5 years. They do have the option to say no, but you can always make the ask. And that can give you more time to focus on your business, bringing your employees back, growing, finding new ways to market and grow in this new post-COVID era, rather than stressing about how to pay a larger loan back in a much shorter amount of time. So this is, again, just flexibility through and through.
Yeah, I mean,
Thank you.
Go ahead, Janina.
Oh, no, go ahead, Nelson.
Yeah, I think it's been an interesting experience or journey since the implementation of the CARES Act and all of the SBA's interpretation, the forgiveness application, and the changing of the rules, changing of the formulas, or revising the formulas, updating it. And I think we're almost there in terms of where and getting clear enough guidance of the PPP loan forgiveness. In my mind, there's probably 3 open issues, big issues. One is, how will the business impact rule that pertains to health and safety restrictions, which is number 4. There's now SBA has to come up with a new formula to implement this new rules. So that's still out there. And of course, the dreaded PPP application. The last one was pretty difficult to comprehend. And so I hope the next ones will be a lot easier, with these new rules being actually a lot easier than what we started with.
Yeah, thank you, Nelson, and thank you, Elena. I think, one, thanks for taking us through those provisions in that deep dive, and for adding the color on sort of how do you think through those, how do you apply them to your situation and your business. And to your point, Nelson, there's just been so much legislative change that's happened with, it seems like over the last couple of weeks. I know that, from hearing from our clients, it seems like every couple of days, it's like, is this new? Is it true? Is it not? So this is really helpful to kind of get this boiled down to these kind of 5 key things. I think, again, we know that, as you mentioned, we're still waiting on the actual forgiveness application to be finalized, because clients, you guys are going to be submitting those directly to your lender, to your bank, that you received your loan from, and we don't know what that process looks like yet. So we don't have a timeline, we don't have a date, we don't know what the process or the final application form looks like. But all of that said, I know that people are looking for, like, okay, so what can I do now, and what should my next steps be? So I guess just to kind of wrap it up, Elena, Nelson, can you give us what are the things that people can start doing now to sort of prepare, in hopes that we have an application that comes out soon and is published soon?
Sure. I think the first thing you need to do is reassess and categorize your spending into payroll and non-payroll expenses. In light of the new 60-40 rule, you might want to include more non-payroll expenses in your forgivable loan amount. And so that's probably the first thing you should do.
Absolutely.
Yep.
Absolutely. And that really moves into number 2, right? You analyze and categorize those expenses, and then we know number 2, we look at that ratio, and we don't apply for forgiveness unless we've already spent all of the funds with a 60-40 ratio. It's fine if you met the 75-25 older ratio. That's absolutely fine as well. But you want to make sure that you spent all the funds and hit that 60-40 ratio. So if you're not there yet, you might want to take advantage of that next 24 weeks.
Right. And if you're not there yet, you want to evaluate your business needs for the remainder of the year, your rebuilding plan, so to speak, with the focus on rehiring and pay and non-payroll costs. So you want to say, okay, here's what I need to do in order to revitalize my business, and how will my hiring plan or my people plan play into that?
Yeah. And people are so important. How do we bring them back? And from there, we are going to determine when our 24-week covered period ends. So the original 8 weeks, 56 days, 24 weeks, 168 days. And that's from the date that you received your loan. So that's how you can determine that date. I know I pulled out an old format paper calendar and counted the weeks. Align that recovery plan and those hiring goals to ensure you spend all your funds in the 24 weeks. Most businesses will probably easily meet that, but if you're one of the businesses that is recovering a little bit later, you're not able to open until a later stage of reopening, you'll probably use at least your 40%, but you'll need a little more time to make that 60% of payroll costs. So just make sure that over those 24 weeks that you can spend those funds to receive forgiveness.
Right. I mean, definitely. I think with the 24-week covered period and the many safe harbor rules, I think Congress have now, and SBA have now placed some reasonable expectations or restrictions on how this fund should be used. And I think most businesses should be able to meet that requirement and be able to achieve full forgiveness or pretty close to full forgiveness.
Yeah,
Thank you, Nelson and Elena.
We have that time.
Yeah, I think it's definitely, to your point, Nelson, I think full forgiveness certainly seems much more easy to achieve in light of all of these changes and these extensions and just options, really. I know that when we got the updated, not the most up-to-date application, because we know there's a new one coming, but the one that came out a couple of weeks ago, that was the first sign that there was already some options that were being provided. And the PPP Flexibility Act has really provided more options for all of the borrowers and all these small business owners, so that full forgiveness is, I think, going to be much easier and much more possible. And thanks you guys for walking through those next steps. From a documentation perspective and a partnership with ProService, we are going to continue to be collaborating with the local banks. So as we learn more about what that loan forgiveness application is going to look like, as we learn more about what documentation is going to be required, we will continue to support all of our clients, all of you, with expert guidance and with the most up-to-date information. I know we've said it numerous times, but with all of these changes, the SBA is going to have to revise that loan forgiveness application. So we are really just waiting on that. There was the application that came out a couple weeks ago. That formula is pretty complicated, but it might be still helpful for people who haven't already looked at it. We have an on-demand webinar that you can watch if you'd like to take a look at it. It's called PPP Loan Forgiveness Application, What We Know Now. And that is available on our website at proservice.com/coronavirus. Again, rest assured, as soon as we know that there's a new application, as soon as we know that the banks are going to start accepting loans and what loan applications for forgiveness, as soon as we know that they're going to start accepting, as soon as we know what documentation they're going to be asking for, we're going to certainly help share that and disseminate that information out to you, and what that process will look like. Again, I think Elena and Nelson have already kind of talked about strategically how you can start thinking about whether or not you're going to need the 24-week extension. If you've already spent all your funds and you've gotten that 60-40 split, then maybe you feel good and you want to just start gathering your documents. Or if you're going to start, maybe planning for the next 24 weeks to make sure that you've got your business in line. Either way, the things that you can do is just start gathering, any normal documentation that you would need in a process like this, which would be things like those offers of employment. Nelson talked about before, where you made somebody an offer of employment and they didn't, come back, they didn't want to work, or they're not able to work for some reason, and you've got that in writing. Make sure you've got all those documents together. Of course, your bank account statements, canceled checks, any statements on any of those, mortgage, rent, equipment, leased items that Nelson mentioned as well, that are part of that up to 40% non-payroll costs that you could have spent. So those are the types of things that you can start gathering now, regardless because those would be the kinds of documents we anticipate your bank will be asking for. Again, keep in mind, our hope is that the banks are using this extra time right now to start making this forgiveness process more efficient and very, hopefully, friendly, easy to follow. But at the end of the day, they are also waiting on the SBA to modify that forgiveness application. So that's sort of what we all need in order to finalize this process. So I know that we've shared a ton of information with you guys today, and we really appreciate you guys continuing to partner with us as clients of ProService. We appreciate your business, and we are glad for all of you that were able to secure the PPP loans, and we are hoping that this information helps you, if you want it, to maximize and achieve full forgiveness, or at least to have a really clear perspective on how you're going to be able to spend those funds if you decide to extend to 24 weeks or even beyond with the loan. So I think with that in mind, that really wraps it up. Mahalo, thank you for joining us, and remember, we're here to help you. Have a great day.